Investors and traders, welcome to the channel. Today is 8th of September 2024. Hope everyone is having a great weekend. We will be taking a look at the key US markets, mainly the US stock markets, and we'll be doing technical analysis. We'll do a deep dive into it, but we will also be taking a look at some really interesting charts that I've prepared for you guys. I think you'll enjoy this session. So as always, this video is for educational purposes only, and it's not a financial advice. You have to do your own work and make your own decisions. Okay, so before we take a deep dive, let's take a look at this interesting chart, which has come from JP Morgan estimates and from wallstreetjournal.com. And here, what this chart shows us is actually a percentage of US household assets held in stocks. And of course, in 2024, it has reached a new all-time high. Now, it is interesting to see some of these figures. I don't know how they compile this data, but they must have, the resources to have this data and plot it for us. So here, you can see this is going back to, I believe, even before 1970s. There was like a huge participation, about 30%, and there was a big decline. And then it was near the 2000 dot-com bubble that the public or the households were holding about 38%. Of the assets were in stocks, and I think one of the reasons was because of the whole internet. It was the accessibility. Now investing and especially trading into stocks was much more accessible, because you were able to place orders over the internet using your computer and a web browser. And of course, that also brought in a lot of competition. So some of the things which existed in terms of having a broker, calling over the phone, paying commissions over the phone, and commissions being quite big, and then paying huge bid-ask spreads. Technology actually brought or narrowed down a lot of that, so made things accessible. So we have seen that 38% just before this dot-com bubble burst. And then the interesting thing is that moving into the great financial crisis around here, that actually did not take out the peak of the dot-com era. So that is a very interesting observation. Of course, is the the GFC financial crisis, the great financial crisis bottom around here. Slowly but surely, the participation has increased, and now it's about 42%. That's the highest ever since they have been recording this data going back to 1950s. And a look at the acceleration, which is really after the 2020 and where we are now. So this is a really interesting one. Being 42% of the U.S. households is having their assets in the stocks is really high number, and maybe it could reach even higher to 50%. Who knows that? So this just shows us that the public is in the stocks. Now, on the contrary, what is really interesting is that here is a chart of Berkshire's cash pile hits a record 277 billion as it slashes its Apple stake. So one of the greatest living investors in the modern history, he is moving in the other direction. He is piling into cash. So this is really something very interesting what the households or what the public is doing, and what actually really professional people are doing with their money. So they seem to be moving a lot of their money into cash, and it's just not sitting in cash. A lot of them are actually into shorter term T-bills, most likely 3 months T-bills, which are paying pretty good interest. So Mr. Buffett is actually earning a pretty good amount of money, and in some cases the yields which are available on the shorter end of the curve, some of the stocks are not even able to meet those kind of yields which are available now. And some of us who have got accessibility to those kind of instruments can actually lock them in while the interest rates are still pretty high. So this is really interesting. This comes from financialtimes.com. And what we have also seen in the recent news is that Warren Buffett has also cut his stake in Bank of America. So he's really in a big way moving into cash. So this is something that needs to be we need to pay attention to. Now, there's a really interesting chart which we actually took a look at a few months ago, about a month and a half ago, and this is basically a ratio of semiconductors, which is the SOX index, to gold bugs, which is the HUI. And this ratio is actually very interesting to observe, because what we have seen is going back about 24 years. So in the 2000s, in fact, August of 2000, there was a peak there. And this is where the tech stocks, they started to, or the air started to come out of them. And then what we also saw was actually all these kind of gold or mining stocks, which were actually pretty bombed out in terms of their price action. They actually began to get some traction, and what we can see is that in terms of the ratio, with semiconductor SOX being on top, the gold bugs is actually performing better, and this began to come down. And back then we had the Fed funds higher than 5%. It was the internet.com era. And today, 24 years later on, we also have the Fed funds more than 5%. And then we are in the blockchain and the artificial intelligence era. And here, this is the monthly chart, so it's pretty long term. So we can see that this actually peaked March of 2024, and it seems to be actually moving lower. So this is a really interesting observation. So what it also means is that the miners and the gold miners in particular, they are not very easy to invest in, because there are different classes of this. There are royalty stocks, which also happen to be higher priced, and then there are actual miners, and within the miners there are senior miners and junior miners. The senior miners will be something like Barrick Gold or the Newmont Mining, and the juniors will be just thinking of a name like Hecla, for example, or Nova Gold. But so one has to be really careful in deciding how they actually invest into miners if they have to. And a lot of times it's actually just investing in the commodity itself, which has been one of the best performing asset classes, which is gold in 2024, might just be the way to move with it. Now, something really interesting, another chart. This one is a ratio of NASDAQ to the SOX, which is the semiconductor index. And basically it'll have stocks, chips such as NVIDIA, Intel, AMD, etc. So this one is really interesting to observe, because here what we see is, now this data goes back to, I think the SOX index was created sometimes in the early 1990s. So this is what the data which is available on TradingView. So we see from here a clear cycle in that the broader NASDAQ stocks, they performed quite well for about a 3 years period and did a perfect ABCD pattern. And then came a period which lasted about roughly four years, in which the semiconductors, they were actually performing much better. And then there was a long period which lasted about 10 years, in which the broader stocks, the technology stocks, they began to perform much better, and the semiconductors, they were kind of lagging behind. And then there is like a zone of about 3 years where it's just sideways price action, and then what we see is the semiconductor stocks actually begin to outperform the broader NASDAQ technology related stocks. And here we have a very nice pattern formation shown in blue, right at the 61.8% retracement. So what I'm trying to show is that there is clearly a cycle which exists in that, and in my opinion that is possibly because if we just take a look at what was happening around here, so the internet, it came into existence. Well, the intranet had already existed and it was being used by defense forces, army and stuff like that, but for public, it just rolled out in the early 1990s. And one of the key things for this technology to proliferate was actually the buildup of network. So Sun Microsystems used to have some sort of logo, or one of the sayings was that network is the computer. And that was the kind of motto which was picked up back then by Cisco. And the Cisco, they started to produce networking equipment, and was sort of fantastic, a darling in the .com era. kind of like what Nvidia is, and we'll have a very interesting chart for you to take a look at. And so for internet to spread, you really need that kind of network to be available. So in my opinion, the cycle goes like you have those kind of companies which are really in the nitty-gritty of producing the kind of bricks. So you'll need faster computers. For that you need faster chips. More computer sales means more chips being produced, etc. So it goes through that cycle, and once that is built, then the companies which are actual users of that technology, they begin to outperform, and this is what we have seen lasted for such a long time. So to me, what appears is that we might have seen, since last 9 coming to about 10 years now, where we have seen the chip stocks actually overall performing much better, leading to this retracement, and the tide might be actually turning in the other direction. So the overall general NASDAQ stocks, or the users of technologies such as the artificial intelligence chips, they might actually begin to perform much better because they have a lot of data available. So we could see some sort of decline in these chips stocks, but general stocks for NASDAQ begin to outperform. So here are the key dates where key turns came in. And right here we have this really nice ABCD, and right at the 61.8% retracement, and it's a pretty good support level. And this is a monthly chart, it's really long term. It's a monthly chart. We have had this month just started, so 1, 2, 3 months where this support level has actually been held. So this is really interesting. Keep an eye on this one. Now the other, let's take another look. This one is the chart of Nvidia to NDX. So basically we have Nvidia the numerator and the NASDAQ 100 in the denominator, and what we can see is the Nvidia stock, we can see there is some pullback coming into it. Now it's not the first time Nvidia has done this, because we have seen this happen here back in the late 2001, and it pulled back for quite a few months, and then bottom around October of 2022, and then a big rally up. And then we have seen here this pattern, in the late 2018s as well. So what it means is that the pullback that we are seeing here, we are actually 1, 2, 3 months into it. This month has pretty much started, but we could actually be at least in a sideways to lower trading range to perhaps a little bit lower for several more months to come, where the broader NASDAQ stocks are likely to outperform Nvidia. So another interesting one. Now let's take a look into the Nvidia to gold bugs index ratio. So we have the Nvidia stock, and if we divide it by HUI, which is gold bugs index, it's also showing us something really interesting, quite similar to the chart we just saw. So here we can see even the gold bug seems to be performing a little bit better over the course of a couple of months, but it's not the first time it has happened. These boxes show that these are the regions where it has happened before as well, and Nvidia was able to actually break out of it. Now the chart, which is really interesting, it was also actually really interesting for me to watch this one when I constructed this. This is the Nvidia versus Cisco. So as I mentioned, in the early 90s, especially towards the middle of 1990s, Cisco stock was darling of the stock market, because they were producing so much networking equipment which was being used for the construction of intranet. The companies were using it to have all sorts of needs. They had to build out their own infrastructure, their own intranet to be used within their companies, their offices. And then of course there was this telecommunication boom as well. So we were having there were no smartphones back then, and we had Nokia, but the cellular phones were just coming out, and they were being adopted by masses. So it was a really interesting time back then, and this is certainly reflected in the stock price for Cisco. which is in the top. This is the candlestick chart, and the one which is at the bottom is the Nvidia stock. So the Nvidia, I believe, went public around here, maybe in 1998, late 1997, and here, of course, it's just gone through its normal cycle. But where it is really interesting to see is that it kind of really jumped in 2015 and then really accelerated its move in December of 2018, which is quite similar to these two eras, especially in my opinion. The December 2018 is very similar to the kind of move which we saw in Cisco in July of 1994. And then the reality is that 24 years ago, a little over 24 years ago, Cisco stock topped, and it's just been 24 years and it has still not made a new high. So could Nvidia be doing something like that? I see a lot of similarity in this. This is an analog I'm using. I think we need to see more information to have some sort of a confirmation, but it's an interesting chart to keep an eye on. And it's possible that Nvidia over the course of next few years perhaps begin to just trade sideways. So it has already become a very interesting trading vehicle. So maybe the long-term investors might begin to pair some of their positions, but the stock will be a very interesting day trading to swing trading instrument. So I thought the similarities that we see are just really incredible when we just compare these two stocks, which have been pivotal, Nvidia for the artificial intelligence, and then Cisco back then with their networking equipment for telecommunication industry, and then of course the internet. Okay, so now we just move to our NASDAQ 100. So here, last week, we saw a really sharp move to the downside in NASDAQ. So that is actually reflected in this candle here. Let me actually blow this up so it's easier to see. Here we go. There we go. So this was approximately using the, and it might be just an approximate, using the tool that is available through TradingView. We had about a 6.5% move in just 1 week, and now that's quite unusual. And in terms of the standard deviation, last week was a 3 standard deviation move in NASDAQ. Now that is very, 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 very rare. So what is really interesting to also observe is if I just take this and try to see when was the last time we had a move like this. So this was pretty much August of 5th August, but it actually closed higher, so there was a lot of intraday volatility. But towards the end, the week actually closed higher, so that's an interesting one. This is the week of 22nd of July. We didn't have a move like this. This one was, which is the week of 15th of April. Not as close. It was close, but not similar. Nothing like here in this smaller leg. So really, we have to go back around here, back to 18th of Jan 2022, when the bear market had started in earnest, that we find something similar of this magnitude. So it's really interesting what happened last Friday. And then 3 standard deviation is very, very rare. So what does it mean? Now really interesting to see is that of course it means there is a lot of selling pressure, but we are also watching this trend line right here, because if it breaks below, then this August 5th low is likely to get taken out to the downside. My opinion, as I mentioned in last week's video, was that perhaps we will remain in a trading range behavior, perhaps till the election period, and the 5th of August lows might not get taken out. But if we begin to see these kind of moves, these are really sharp moves, 3 two standard deviation, three standard deviation moves quite regularly, then the chances increase that this low could actually become a possibility where we at least in NASDAQ index we could see this broken down, and then we'll have further targets to the downside, and I'll show you that what could be possible. So one of the things is that if for example this 5th of August low, now we are discussing bearish scenarios here, and at this stage just a scenario, it's taken out in assuming that we have the point B being 19th of August right here, then just the ABCD takes us down to about 16,400 in NASDAQ. Now really interesting is that if we were to just use our sorry, let me just copy this. Oops, it did, but that's the wrong copy. Let me delete that. Sorry about this. There we go. So I just want to copy this one. So this was the entire 2022 bear market, and if we just copy that and see what it's gonna do, then the entire leg down could in fact come down to about 14,700, and just below that we have the 61.8% retracement coming in at 14,488. So that's of course gonna be a bear market scenario, right? But it is possible if the market remains as bearish, and the 5th of August low actually gets taken out to the downside. Of course, there are some structural support levels, the ABCD levels around here, the entire 38.2% retracement of the CD leg around 17,000. But ultimately, it could reach down to about 15,000, roughly speaking. Right here, it will be just equal to the BC swing. So that's one possible bearish scenario. Now moving lower to daily chart, what happened is also really interesting from a shorter term perspective. So where the market closed last Friday is right at the 61.8% retracement of this low of 5th of August to the intraday high of 22nd of August. But if we move down to a 4-hour chart, it's really interesting how the market has done that. So the market has actually done that in several ABCD formations. So we have this bigger ABCD, which is shown in the red, completed pretty much around that mark. It's a little bit lower, a few about 150 points lower right here. This is where it completes, and we have the some ratio 61.8% ratio in this black round here in that region. And then it had also done this blue ABCD where we saw some bounce, which actually reached about 38.2% retracement, and then that's where the sellers came out. I'm going to delete this because I want to keep my chart cleaner. So it was not able to take that out, and this is exactly what happens in strong trending markets. And then we have another one which completed the smaller one, which is shown in the orange. Now we have a combination of two ABCDs, the smaller leg, the orange one, the big one which had the CD leg extended by 1.618 times the AB leg, and then we also have the 61.8% retracement. So the market also closed with a -3 standard deviation, pretty bad close. So now there is a chance that we also have the timing coming in on the 10th of September, that in fact the buyers might step in at the open, for example, on Monday, because one of the things is that for the market makers who write options, they'll have to actually look at their positions and adjust accordingly. So there's a possibility in the early part of next week, we might actually begin to see a pretty good bounce shape up. And of course, based on the video that I did yesterday, we have got our timing coming in on the 10th of August as well. So starting from tomorrow, we'll have to watch this region really, really carefully for a possible start of a bounce at least, and then we'll have to wait and see for further clues from the price action. However, if the market opens with a large gap down, then there's a chance that we could just see a further a decline. But the way the market has closed at these key pattern formations, and especially on the 4-hour chart in NASDAQ, we have these two patterns completing right at the key ratio. From a pattern recognition perspective, it is a pretty good support level where the market actually closed last Friday in NASDAQ 100 futures. Okay, so now let's take a look at the SPX. So that's going to be the S&P 500 cash index. Here we go. So we were watching for this 38.2% retracement right here, and of course we have this gap. And we were looking for this gap to be filled, and which it did. But then on Thursday, came to about 50% of it, and then boom, this is what we have seen, a very sharp decline in this. Let's see in terms of percentage. This is the cash index. Here we go. So roughly 2.17% to the downside, not as severe as what we saw in NASDAQ. So here the market pretty much is retraced to 50% of this entire leg of recovery that it did, where it just went and closed this gap. So again, there's a possibility, because done about 50%, close pretty negative, we might actually see some sort of bottoming action to take place around early part of next week, perhaps 10th of September, from 10th of September. Now, if we were to take a look at this, also let's take a look at the weekly chart here. On the weekly chart, we can see that it's not able to take out these highs. So there is a chance, because we still have not completed this big ABCD, this one, this in black, which could take it to about 6100. But in NASDAQ we have some of the other indices, possibly not as well, such as Dow. So there's a chance at least it could complete here. We'll have like a combination of two ABCDs. So that is a possibility. The index could still do that. So perhaps there's one leg higher still left in the S&P 500. But if we begin to see, and especially if the 5th of August lows are taken out, then it's possible that perhaps we might not be able to see that. But right now, there is a possibility we could see some sort of bottoming action take place, pending further price action. Now let's take a look at the futures for the S&P 500. So futures are showing something quite similar as well. This is the weekly chart for it. We do have this black ABCD completing a little bit higher. Now there is a chance that you can see there's this trend line here, so it could perhaps come into this gap around here a little bit further down, and then find support from here. I'm expecting more of a trading range behavior, so I'm thinking till from between now and the elections in November. I don't know, there's how much time is left, maybe about 6 weeks, 7 weeks. We are more likely to see a trading range affair in these stocks, and then there's a possibility there's a sort of a run up, and we go and actually complete another high in S&P 500, and that might just be that'll just complete our big ABCD pattern here. There's also a possibility it might not actually go all the way, but it might just be able to take out the highs of July. So that will be another scenario. So this is what we are watching in the S&P 500 cash and futures chart. Now, if we take a look at the Dow Jones, so Dow Jones is interesting. Of course, it has not completed its big ABCD, which NASDAQ did from the March of 2020. But where it is now and getting up about 7,000 points, I still have it there, but it might be a little bit dubious. One of the things is because it has completed its extended ABCD right to the 1.272 times of the AB leg, and also right at or came pretty close to the 1.618 expansion of the BC swing. So there's a pretty good amount of resistance here. It just really needs to clear it with a lot of power to be able to actually complete this black ABCD. If it is able to do that, so the chances are that it might just go more sideways trading range to lower, in fact. But if we have also seen some rotation taking place in the industrial stocks, so if, it's also possible if more of a rotation is in play, and then some of these stocks could actually lift this higher. So really interesting juncture where we are now. And last but not least, Russell 2000. So the Russell 2000 here, I'm not entirely sure whether the rotation aspect that we have been looking at will be that strong that the small caps could really outperform that we could actually complete this ABCD higher. So the chances are that, okay, we might actually go and test the higher trading range right here, highs of 8th of November. But for that, it needs to clear the resistance around 23,187. So I would imagine perhaps this blue ABCD might be more achievable than the black one. But then again, quite a lot of resistance level to go through. And on the downside, I mean, the whole pattern changes if the 5th of August lows are taken out to the downside. And look at, if you look at this move last week, it was a pretty bearish move in the small caps. Here we go. So they were down about, yeah, this is showing about 6%. So that's, very close to what the NASDAQ did. So definitely higher than 2 standard deviations. So if you begin to have moves like this, then the price action is more to the downside, in my opinion. And if you look at IWM, which is the ETF, here is doing something similar again. So right at the 20-week moving average, below that is 200-week moving average. If that's get taken off the downside, then it opens up a lot of further downside. And then finally, let's take a look at NYE, which is the New York Stock Exchange Composite Index. And here we go. So there's a chance it could actually go to 20,000 roughly, 1.618 expansion of the 2022 bear move. So it's got a pattern very similar to Dow Jones. So I think if we just keep on watching Dow Jones, it's most likely this is what this index is going to do. But it's really interesting to take a look at New York Stock Exchange Composite Index because it's got about 1,600 to 2,000 stocks, including ADRs. So it has these international stocks as well. So this is what we are looking at in terms of what the market is likely to do. So for the sectors analysis, I think I'll do another video with a recap of tomorrow's price action. And then we'll also actually cover some of the sectors there and what kind of rotation we are looking at. So we'll just dedicate more time towards that in tomorrow's video. So thank you for watching the video. Good luck, good trading, and speak to you guys soon. If you happen to like this video and you found it of educational value, give it a thumbs up. And if you found our analysis of educational value, then please do subscribe to the channel. And if you do, then hit that bell icon button. That way you will know when the new videos are posted. So thank you very much for watching. Good luck, good trading, and speak to you guys soon.